All right, guys. Good morning. Good morning. Happy Friday, the 11th of July. All right, I want to jump on the mic here, cover a couple of things. I'm taking off here in about an hour, a couple of hours, and heading up to Vermont for about a week and change. So I'll be back on the mic on Monday, the 20th. No, Monday, the 21st. But I'm going to bring the PC, so I'll be locked in. I'll be trading. I'll be sending out all the alerts. I shall be in action. But all right, guys, a couple of things here before the open. I think the biggest thing right now is just a reminder. How much easier everything gets, and you have a daily squeeze on the indexes. I think swing trading gets easier. I think day trading gets easier. You could be a 2-minute time frame scalper. You're getting that kind of wind at your back. Everything's a lot easier. So here's the QQQ futures. Same thing for the cash QQQ. This is June until early June until the end of June. Daily squeeze setting up. They get the white arrow. They got all the structure, momentum, the perfect score of 15. That kicks off a nice little 4.5% to 5% rally to the upside. And looking back in June, I think we had about 11 trades. 8 of them worked out really well. We caught the NVIDIA, we caught Snowflake, some crowd, QQQ, little Palo Alto. Then you look at the last couple of weeks. You had a squeeze fired, market broke out. It gave you what you should call for from a daily squeeze. And now things have gotten just really choppy, really tight here. Looking at your bigger time frames, your monthly chart, your weekly chart, your daily charts, nothing's changed. It is bull momentum, bull structure, bull trend, a score of 15 above the AEMA. Now, at some point, there will be a spot where they break the 8. Then you're probably getting that pull back to the 21 EMA. But yeah, it's a tricky spot where nothing changes here for the bigger time frame. But kind of like, Monday, Tuesday of this week, you go look at your 4-hour down to a 5-minute, everything's just back to neutral. So yeah, I think you got to like that daily chart for a long. Tough to want to jump in and buy it with a neutral 15-minute, bearish 30, neutral hourly. And I still think for better or for worse, depending on your point of view of the market, we should get our next big move from this 4-hour squeeze. And the problem since you got the squeeze has been momentum. You got a good uptrend behind it. You have good structure. 21 above the 50, stacked EMAs, 8 above your 21. We got the negative cross back here on, that was the 4th of July. All right, here comes July. Happy Independence Day. Here's your negative momentum shift. And you can have the squeeze, have the structure, have the trend. If you don't have momentum, you tend to get a lot more of this. They pop it and they pull it back a bit. They pop it, they pull back, they pop it, they go for the breakout, they fail. They dip again, they try again to pop it, try again the breakout, they pull back in. It's a lot of ugly, tight, aggravating back and forth. But more importantly, at some point, that 4-hour squeeze will fire. And if we take that 2.5 to third ATR extension, if they break it short, that could be a slippage down to about 22.7-ish. If they can break the bad boy long, we're looking up here 23.2 and change. Frankly, I don't have a great read on it right now. 4-hour chart itself has only 6 points of the 15, which is not bearish, right? I'm not going to be in a big rush to short that. Preferences, I'm shorting a negative 15, not a positive 6. But that's pretty neutral. Let's go look at the hourly NQ. Do I want to buy that? It's a negative 3. No, I definitely don't want to buy that, but am I going to be in a huge rush to short it? Well, you're at the 200 SMA and no active sell signal, no broken structure, neutral trend. I don't like it for a long. I don't like it for a short. So yeah, guys, that is kind of the scoop here. The classic case of your bigger time frames say look for a long. And your lower time frame, say pump the brakes, Junior, maybe not so fast. It'll be a much, much, much easier short if they can break it and close it below that 8 EMA. And then they're cranking out the 30-minute sell signals, 15-minute, all of the bearish things. They don't do that, and they keep it above the 8, and it's just a neutral 30, neutral hourly. You probably don't get a big flush. You probably don't get a big rally, just more of the old chop suey. Buy signals above the daily 8, they might want to go for a pop. So keep a very close eye on the 4-hour squeeze there, and then for the cash QQQ, which will gap down a couple of bucks here at the moment. I think the same exact rules apply. If they keep it above the daily 8, which is 552-ish, it's a super bullish daily chart. They could break the 8, pull it back to the 21 around 545. It's still a really bullish daily chart. So we're trying to figure out where's the next good buy zone. Is it the 8 EMA? Is it the 21? Do they break that? Is it down here at the 50? You want to find your level, then you want to find a trigger. That 8 EMA could be a level. We're neutral on the 5, the 15, the 30, the 1, the 2, the 4. Ain't going to get any better on a $2 gap down. So yeah, I think a spot for a lot of patience. And like I said, there's a time to be aggressive, push your sizing, push everything within reason. And I think that time is always when you have a QQQ or an SPX daily squeeze. Could be a daily squeeze, could be a 4-hour, could be a 2-day squeeze, a 3-day squeeze. But when you got mama market coiled up for a big move, it just again makes everything so much easier. QQQ has a daily squeeze. All right, let me go find something like Snowflake. All right, perfect. This also has a good looking daily squeeze with the market. That might go hand in hand for a nice push. We're buying it on that candle, catching a gap up. There was the QQQ itself, which we traded. Then you look at our last couple of trades here. We had the micro strategy, which worked out awesome. This thing's going beast mode right now. 433-ish here in the pre-market. Strong. But we did a put credit spread back on that candle, caught the daily squeeze, white arrow, the push. We took our paycheck yesterday, and then looking at your 2-day squeeze here, maybe not in a straight shot from here. But I do think you look for a path eventually towards 450, 460-ish. They go and gap it up another $12, $13 this morning. I'm not going to chase it. I'll buy a pullback to an hourly 21, or you buy a 15-minute, 30-minute squeeze. But yeah, point being, that one worked out really well. Did the job we hired it to do, and then we had FTNT, which they beat that bad boy with the ugly stick yesterday. And here's the thing: it's the same exact trade. Where's our trade sheet here? I got to update the loss on FTNT and the win on MicroStrategy. But point being, here's our June trades. Spotify, QQQ, Microsoft, JP Morgan, Coinbase, Snowflake, Nvidia, Palo Alto. And then a loser on FAST, Palantir, and a lotto shot there on Nvidia. But point being, there's a much easier moment in time to call for a bigger push. Being led by the indexes. Now you can go fire the scans. You'll find the same exact setup. Different context. Context being markets kind of taking a breather here. You're not at your 21 EMA. You're not locked and loaded in a big 4-hour squeeze, big daily squeeze. It's bullish, but 40,000-foot view. We gave you the easy part of that push. So finding that daily squeeze on your scan back here, It's a way different moment in time than finding it up here. But yeah, anywho, so for FTNT, one of the bigger spankings you'll see in a single candle. But here's the key: it's the same exact trade we took on MicroStrategy, Palantir, Snowflake, Nvidia. Find a squeeze, find a white arrow, look for good alignment, fight for a good entry. Sometimes I'm thinking for an appropriate way to word it. I don't need HR calling me. Um, Sometimes they just get smacked around. Is a nice way to put it. Key thing when you're looking back in your journal: did you do the things you should have done? Look at the spreadsheet, find leadership, find relative strength, find a squeeze, find a white arrow. Um, these kinds of trades can be they can be very frustrating. I think the best way to put it, and you got to train yourself to think like this because human nature is pretty much the opposite. Human nature says, all right, here's FTNT, and it's got this squeeze, it's got these buy signals, it's got these special white arrows. I'm going to jump in, I'm going to buy a shitload, and it's going to make my week, make my month. I'm going to be FTNT rich. So you jump into a trade tying those kinds of expectations to it. All right, beautiful close there for Wednesday. Big candle, close at the highs. You're already counting that paycheck. Then you wake up Thursday morning. All right, opens up flat. We're looking good for a breakout, and then just they cream the poor thing. So if you open that trade thinking, all right, here comes a huge paycheck, I'm gonna crush it, blah blah blah, and then this happens, it can set you back mentally. Where the healthier thinking should be, and this is all Mark Douglas. Thinking should be, all right, I found my moment in time. I've got my setup, I've got my trigger, I've got my edge. But it's not so much edge on this one individual trade. You want to think every 25, 50, 100 trades you take, what kinds of setups, what kinds of signals, what kinds of entries you got to focus on to give yourself a good looking spreadsheet. That should be the goal. All right, I'm going to take 100 trades. I'm going to track all of them. And I'm not going to make any one individual trade the end all be all. Thinking about every 10 trades, every 15, every 20, 50, 100. And then from there, you build up your own track record. You get a good sense of your risk reward, your risk reward and your win rate. What I found, this is like 4, 5, 6 years running. Over the course of every 25, 50, 100-ish trades, I'm right around that 70-ish% win rate ballpark, which on paper, I think a lot of people would love to sign up for. All right, then you think about the reality of a 70-ish% win rate. Not over the course of every 2 or 3 trades you take. Think about every 100 trades you take. You'll be looking at something like 70-ish winning trades and about 30 or so losing trades. Now, if you can accept that reality before you take your next 100 trades, I think it frames these kinds of moments in time a little bit differently. I'm going to do my job, take my setups. I'm going to do that 100 times in a row. And history suggests I'm going to have about 70 trades that work in my favor and about 30 that won't work in my favor. If you know that reality about your system going into it, you frame it a little bit differently. And don't get me wrong, is it irritating? Yeah, it's super freaking irritating. Like, perfect squeeze, all the triggers, great close on that candle, and then just they crush the thing. But it's just a losing trade, right? You got the batch of your losers, you got your batch of the winners, and they're both going to come in different shapes and forms and sizes. Sometimes get long, then there'll be a slow, painful grind higher. Money, but you call it slow money. Then sometimes it's a trade like Snowflake. Right, you buy it on that candle and you have no drama, no drawdowns, no issues. You're never in the hole. You catch the immediate gap up. It's everybody's favorite trade, the easy double overnight. Same things apply for the losses. Sometimes it'll be all right. I'm going to buy. I'm buying Snowflake right here, and then it's a slow, painful drift lower and a break below the buy zone. You buy it on a Monday, and 5-10 days later, they slowly go and break your level in the sand, or your line in the sand. Some of your losses look like that, and then some will look like FTNT. All right, the bell of the ball on Wednesday, and then whatever whatever the opposite of the bell of the ball would be the following morning. But I figure I'd talk about that a little bit. I've always found that helpful. That's chapters, I think, 7, 8, and 9 in Mark Douglas's Trading in the Zone. But all right, and then we have the Palo Alto, the other basket case. Same thing, right? We jumped in on that candle. Excuse me. No, we had jumped in on that candle. Excuse me, sorry. On that candle, right, daily squeeze, white arrow, same trade as always. And then you had the immediate flush. Right, they break your 21, they close below it. They fight and pop back above it, and then again, pretty much a mirror image of FTNT. Beautiful close for Wednesday. White arrow, daily squeeze, buy trigger at the high. And my assumption was there was some kind of news here. I'm not too sure. Looks like a news puke. But point being, that'll happen. So if you can buy Palo Alto back here with the mindset of, hey, it might work, it might not work. I've done my job. I've found relative strength, good setup, good entry. You're kind of along for the ride at that point. When I trade with that kind of mindset, I always trade at my best. When it's the opposite, all right, here comes NVIDIA. NVIDIA's got this end of day 15-minute squeeze. NVIDIA's on steroids. I'm going to triple my average size, and I'll be the hero in the room tomorrow. Yeah, if it works like that, it of course feels really, really good. They go and hand you the opposite outcome. It's you're risking both your physical capital and your mental capital. Versus, hey, here's a good trade. I'm going to pull the trigger, and I'm going to do that trade after trade after trade until you can't no more. But all right, all of that out of the way there. So we got Palo Alto, and then what I'll check here at the open is how far are we from our max loss? And look, if we got a couple bucks to salvage, the risk reward actually makes more sense to hold the trade. Meaning your max loss is, say, $400 per contract. If we're down $300, $350 per contract, all right, yeah, you maybe salvage your 100, maybe your $50. Would I bank on it? No. Am I going to pay attention to it and hope for it? No. But the reward could be they pop it, and for next Friday's expiration, you're back here somewhere near 200. And we're maybe not looking at a huge paycheck, but even a break even would be a better outcome. So I'm going to check the risk on that puppy at the open. But yeah, next time we find a daily squeeze exactly like that, we're taking it. Again, and again. And then a few things here I'd look for as far as fresh opportunity. And like I mentioned, the Qs, the indexes are making that a little bit tricky. If the goal is, hey, I want to jump out and buy something today and then be in a really good position to catch a huge breakout early next week. For sure, if you had the NQ with white arrow on the 4-hour squeeze, white arrow on the 2-hour squeeze, the 15-minute, better momentum, structure, all the pretty colors, then maybe you're looking at it thinking, all right, Monday morning might see that 4 hour squeeze trying to break out. Right now, way too much blue. The neutral blues. But all right, one name I do want to watch for the next couple of weeks here is going to be Google, aka the Goog. And the Goog's got a couple squeezes here: a weekly, a 2 day, a 4, a 2, a 1, a 30, and the 5. And of course, we can't forget the big dog on the monthly squeeze. Bigger picture points towards eventually could become a $220-ish stock. If they can go for a repeat of the move they had from that monthly squeeze. And then dropping down, checking out the weekly here. NQ is trying to hold some support here. And then you have the weekly squeeze, which leans pretty bullish. If they could go and crank out a white arrow like back here and back here, it would, of course, be a little bit cooler. And then dropping down to the 2 day squeeze. No white arrow, but it leans bullish. And then for the 4 hour chart, little mix match, neutral trend, bull structure. But I like the combination of bigger time frame squeezes and kind of shaping up here right near a couple of daily buy zones. The 8 EMA, the 21, and the 200. So I think the move here would be to wait for a white arrow on the 1 hour or the 4. The 1, the 2, or the 4. And then more importantly, they got to get it and they have to keep it above that 180. 180 has been Google's arch nemesis for a couple of weeks here. All right, big pump. Here comes the Goog. Rejection. Flush. Dump. Work it back up. Scratch and claw. Here comes Google. Rejection, rejection, rejection. But it does make for an interesting spot. You're at a few launching pads. You've got compression from a handful of squeezes. What I'm saying is maybe an hourly buy trigger, a 4 hour buy trigger, could pack the punch needed to get through 180. Then she could be gonzo. So definitely watching that one closely, and then let me go grab our sheet. All right, we already covered the micro strategy, but that'll be more of a dip buy or a lower time frame squeeze buy. So I'm liking Google, and then there's not too much at the moment, guys, really. In terms of, man, I have to buy that, yesterday. Now one could be Palantir. Palantir with the daily slingshot squeeze. And here's what slingshot means. Let's go look at the Bitcoin futures. So notice back here getting the blue arrow before the white arrow. That blue arrow is your slingshot signal. And what the slingshot means is you have a big squeeze, all the energy being built up, you have really bullish trend, you have really bullish structure, you're lacking momentum. You haven't quite gotten that positive cross just yet. So therefore, it can be a really good heads up. You've got a daily squeeze that's 95% bullish. If they can just get the MACD bars back above zero, you get the full shebang. Momentum shift, green candle, white arrow, then a better chance they're going to go for the breakout. So for that one over there, the Palantir, that'd be the trigger. Same exact pattern back here. Squeeze, good trend, good structure. MACD bar is a little bit below zero. You get your slingshot arrow, get your white arrow, and the push. Hey, let's go check a call wall here for that one. Love these call walls for targets. All right, Palantir, what say you? All right, they finally popped it from 140 into 145. It's been 140 all month. Granted, 145 not really, a mile above the current price. And we already know for a path towards a better target, they got to get through 145. The previous highs. But yeah, I'm going to watch that one, watching Google, and then what else do we got? Bigger picture idea, bigger picture signal. But the monthly squeeze here for the SMH, another beauty. But you have to keep in mind it'll be a beauty even after a 6% pullback to your daily 21 EMA. But yeah, that big fella. If they can get it to fire, you're looking for a path into 315-ish, 320. Which, of course, should make for a stronger NVIDIA, stronger Broadcom, AMD. Speaking of AMD, also has a monthly squeeze shaping up. Not quite as clean as the SMH. All right, anything else jumping out here? FAST, Caterpillar, MMM. There's a lot of good-looking setups out there. But again, I think your next couple of days, it's more of a QQQ S&Ps thing. So build up your watch list, find those better-looking setups in relative strength. Then try to wait for a thumbs up from the S&Ps or the Qs. You want to go buy an NVIDIA, a Google, a Meta. Your preference is you get a thumbs up from the QQQ. And I think the biggest thumbs up could be a momentum shift here to the buy side on the NQ 4-hour chart. But all right, folks, any questions for me? Anything y'all want to take a look at? Put it in the chats. I will get caught up. Then I got to pack up, and we are hitting the mountains. I've never brought my PC up there, so not that I'll be glued to it all day, but I'm kind of looking forward to that. Can do a little early morning futures trading in my my PJs. Not that I don't do that every day as is, but different location. All right, folks on YouTube, we'll kick it off here first. First, Rox Tube looking at the big cat. What's up, Rox? Yeah, so Caterpillar grades out really good here. Where's the cat? I thought I saw the cat. Cat at 95% of its strongest possible score. So obviously very, very strong. But the only thing missing for me would be a fresh squeeze setting up. No 15-minute, no 30, no 1, no 5. So yeah, if I could find that in a lower time frame, could be good for a day trade or a short-term swing. Like most names in the market right now, we also have to factor in this could pull back about 6 or 7% to your daily buy zone. Would remain a really, really good looking chart. But if we jump in and buy a 420 call right here and sit through the pullback, the chart looks good. The 420 call, maybe not so much. That's where up here, these extensions, I think that lower time frame squeeze is even more important. You found a break in the action. You found a level of support. If you could jump in and catch it for a push higher on a really clean 15-minute, 30-minute squeeze, it's also a spot to keep your risk in check. All right, 15-minute squeeze, white arrow. I can buy it above the 15-minute 21. And then I can bow out gracefully for a small loss and then break back below the 15-minute 21. It might be about 8% above that daily mean. I don't have to buy it up here and sit through that entire pullback. So a lower time frame squeeze is a great spot for edge, better risk reward, all that. Good morning, Michelle. Michelle, checking out the Zon, the big Bezos, as they call it. Yeah, Amazon's in pretty good shape here. 15 points out of 15 on the daily chart, structure, momentum, all the fixins, and then a 4 hour, a 2 hour, 1 hour, 30-minute, 5-minute squeeze. And I think the call wall here is 225. Yeah, 225. So for today and maybe early next week, one that could be a pretty good upside target. Jump in, catch it on a 30-minute squeeze, call for a push towards 225. But then looking beyond that, as far as your 4 hour squeeze here, if they could get it and keep it through the 225, they might want to go and break that long. At that point, you may be jumping in looking for a path closer to 230-ish. And then where would be the all-time high here? It's all the way back here, 243-ish. Yeah, I think it looks awesome. A lot of 4 hour squeezes right now. And like I said, I think that'll be our next big move. They break them short. That could be the kickoff for a pullback to daily 21 EMAs. They break them long. They might want to keep the party going. 4 hour squeezes for Amazon, Microsoft, Meta, Google, Broadcom. 4 hour squeezes for the S&P futures and the QQQ futures and the Dow Jones futures. Plenty of 4 hour squeezes to go around. Hey, good morning, Mark. Happy Friday. Enjoy the trip to Vermont. I definitely will. Thank you. Yeah, it's a nice, peaceful place up there, I found, which is just my speed. Hamza, good morning, my friend. Netflix. Yeah, Netflix is having a little on paper you hear, damn, Netflix is down 7% off the highs. That sounds pretty nasty. And it could, of course, get nastier. But from an ebb and flow perspective, rally away from our 21, pull back to it. Rally away from our 21, pull back to it. Rally away from it, and then back to it. That doesn't mean I want to jump in and be the first guy to buy it here. And especially not not 2 weeks, about 5 days out from earnings. But with patience, maybe they hold it, they rebuild some structure, they give us another daily squeeze. Could make for a nice move down the road. But right now you're cracking below it. You got a little momentum shift, 30-minute sell signal, 15-minute. Got to be a little patient on that one. So Pride and Envy, buy all dips if we get the proper triggers. So for example, I would love to buy the dip here in the NQ at the daily 8 EMA. But if I'm going to do that, I need a 5-minute buy trigger, a 15-minute. Got the level, now I need the trigger. Something from the ground up saying momentum, structure, trend, everything aligned for a push higher. Because reason being, we could be at any given level of support, a buy zone, moving average. If they can't paint that picture of alignment from the ground up, they either keep on chopping it or they go on to break that level. Where if they can hold it here and the 5-minute chart goes back to bullish, the 15-minute flips back to bullish, now I'm getting a little bit more edge. I got the level and I got a little something saying, trying to turn the corner, trying to get that next push going. So yes, if they can do that at key support levels, I would keep on getting long. And to me, key support levels being things like a daily 8 EMA, a daily 21 EMA, an hourly 21 EMA, but a support level in no trigger is just tis just a support level. And then Mark, GLXY. Oh, okay, cool. Yeah, we're going to Stowe, Vermont. I've been going for maybe 20 plus years. It's kind of crazy to think about. I'm reaching that age where I can say things like that now. Man, I haven't seen him in 15 years. How'd that happen, guys? GLXY. All right, you have the 50 SMA buy zone, the 21 EMA buy zone, and the 8 EMA buy zone. All right on top of each other. Now the key would be, could I get a 5-minute buy trigger, a 15? It already has a 30, so you could work with your 30. But you got your rocket ship, you have your launching pad, lower time frame buy signals. That's your rocket fuel. Got the rocket, got it on the pad, dump in a little bit of that rocket fuel, then they can look for a liftoff. If we were to go back and look at the move you had from back here off the same exact levels, I'll give you a good example here. What does your 15-minute chart look like? For the most part, throughout that entire push, you got some active 15-minute buy signals. All right, and the 5 and the 30, all the above. So yeah, it's a great spot to look for that. You look for that all the way up here. You run the risk of getting caught up in that pullback. If you can find it right at the buy zone, and the idea doesn't work out, it shouldn't be too big of a hit against you. Yeah, Mark, I would definitely suggest Stowe. And if you got kids or any kind of small family members, look up Smuggler's Notch. Really, really nice family resort up there. All right, and then poking my head here in my room. Good morning, folks. I shall miss you next week, but I'll be tuned in as always. What fun is life being in cash, right? Matthew, it's a really good question. Do I ever roll out my trades? I would roll it out if I still like the setup. So taking for example Palo Alto here, um, based on how it currently looks, I would not roll out. I don't have any buy signals. I've got a bunch of sell signals. It's got breaking momentum below the 50, below the 21, no white arrow. But if I bought it back here and then I ran out of time till expiration, and it still looked exactly like it did when I opened the trade from the get-go, then I think rolling out makes a lot of sense. All right, I might have been a little bit off on my timing, but the actual setup, I still like it. Got the squeeze, white arrow, the alignment. So yeah, in that kind of situation, I would either roll or open up a different trade on the same exact name. But if the thinking instead is, all right, if I was looking for a new trade, would I like it right here, right now? And the answer is no. Then I don't think you would want to roll. Instead, take the cash you would roll and roll into a different, better looking opportunity, which a lot of times can be our best bet. Didn't work out. Pull off the band-aid, go through the breakup, and then move on to the best looking bus stop from there. And then BYD, HLT in the Merc. All right, BYD here. I make it very much a lower time frame thing. Do I like the daily chart? Yes, but I also like it down here at $80. If I don't want to take a $5 pullback on the chin, I could drop down to something like a 30-minute squeeze. And now I can jump in and call for a good push higher, but I can keep my risk in check. Buy it at the 30-minute 21, tap out on a break below the 30-minute 21. Versus, all right, I'm going to jump in and buy my call, and then here we are next Friday. It's a $79 stock. Still looks really bullish, but my calls are dead money. So, sometimes, guys, being at these extensions is just a sign of strength, not a sign of, hey, it's overbought and you have to short it. I think you want to make a few adjustments in terms of how you get long. The entry you look for, the time frame of focus, your position sizing, but this is buy trigger on every time frame, perfect scores. That kind of thing, you keep on taking the 15-minute, 30-minute squeezes, pretty much until they no longer work. So that one looking proper beastly, and then HLT. Same rules apply here for HLT. They could gap it down about $15, and it's a beautiful daily chart. To avoid a $15 gap down, you look at things here like this 15-minute squeeze. Not on the gap down here, but you know where I'm coming from. And then Merck. A little flush here for Merck at the open. Let's see, Merck. Well, look at a few things together here live now that the market opened. Come on, Merck, you're being shy. I would also have to make Merck a lower time frame thing because my daily chart's neutral. Neutral structure, neutral trend. Not giving me too much edge. But if I maybe drop down to the hourly time frame, all right, now we got the full 15 points, way better structure, all the things you want to call for. But all right, y'all, market opened up here, so let's go take a look at a few things, shall we? All right, here's your QQQ down about a quarter. Right, and more of that problem we had from earlier in the week. Nobody home on a 5-minute buy, a 15, a 30, a 1, a 2, or a 4. I only want to buy that daily chart. Can't short it with a buy trigger of 15 above the AEMA. But I can't buy it until the 5-minute chart says buy it, 15, a 30. Somebody, anybody. Neutral QQQs, and then the spiders here. I can only be a buyer of that daily chart, but nobody home. All right, and then checking out a few of these big boys here. Anybody home on the Zon? Or Apple, rather. Apple is neutral everywhere. Amazon, a little bit of life here. Well, 30-minute buy trigger. 30-minute buy trigger. 5-minute. But what did we say earlier? Call wall at 225. On the gap up, high of day was 224.77. So it could be a case of you got a lot of people liking Amazon looking for a breakout, and they've bought the 225 call for today's expiration. And the market maker being the market maker, the market I can't talk today. I gotta have some caffeine. My brain's in vacation mode. The market maker being the market maker, it might be in their best interest to make sure that 225 call for today's expiration expires worthless. And then next week, they maybe take a 4-hour squeeze, break it out, go for the glory. But one of your better looking names right now, and then Broadcom. Could I buy it here? I definitely could. Could I buy a little bit more of it down here? I definitely could. But I want to avoid buying it at either until things change down here. Blue is neutral, and we got too much of the blue. All right, and then Google. Yeah, Google's... The hardest thing I think about Google right now is your timing. You got that big, beautiful monthly squeeze, got the weekly, got the 4 hour, got daily buy zones, but when do they want to go for it? If they do want to go for it, uh, think the Q might be the first close through 180. It could be a proper kickstart. All right, there's Google. A little 30-minute 4 hour buy. What about Meta? Like everything, it has a good looking weekly chart. It has a good looking daily chart. Neutral daily, neutral 4, neutral 2, neutral 30, neutral 15. Now, my preference is they chop it for a few more days. They then begin to print a brand new daily squeeze. Then we're getting buy triggers, and we're getting all the pretty colors. Then we're getting a white arrow. Can make for a good time. We'll see if we actually get that or not. All right, keep on working through here. Microsoft is just hanging out at the 8 with no buys. Netflix is hanging out below the 21 EMA with a 30-minute and a 15-minute sell trigger. Jeez, NVIDIA, so strong. So strong. End of day 15-minute squeeze, chunky gap up. End of day 15-minute squeeze, gap it up. End of day 15-minute. Yeah, what a total savage. And I think the call ball is still a $1.65. We'll find out if they want to get through that. NVIDIA, yeah, 165. Really impressive, so strong. Strong like bull. NVIDIA and then Tesla. Tesla's farting around, and then the TS and the M. All right, and then we took an L in FTNT yesterday, and I don't miss it. And now we have the dud here in Palo Alto. Yeah, what a turnaround, huh? So again, like I said, before I hit the road here, I'll check where we're at as far as how close are we to max loss on that trade. If we're pretty close, I don't think you have to take it off. Do I think they find the bottom here, turn the corner, and rally back to 200 for next week's expiration? Not really, no. But if I've only got a couple of bucks left to try to salvage, we'll hold on tight. Maybe get a Palo Alto miracle. If we were at something like 20, 30, maybe only 40% of max loss, yeah, then you definitely take that trade off, salvage what you can, take that cash, go put it into a better looking idea. All right, and then the idea that did work out, of course, was MicroStrategy. Jeez, damn. Didn't happen on Palo Alto, of course, but there seems to be this this theme of I do a put credit spread and the stock makes a massive move. Happened on MicroStrategy, happened on Coin actually. Yeah, we sold put credit spreads on Coin back on that candle. Only about 55% lower. But all right, guys, there's all that stuff, and then let's see. Do want to take a quick look here at Palantir with yous. Solid. just want to remember until they can get that MACD back above zero on that daily time frame, it might not be the immediate breakout and the rip to 155. It might be more of the building up of the energy. Then they get the cross, then they get the full tank of gas, then they go release the energy. I do like it a lot though. 30-minute shaping up, little 15-minute, little 5-minute squeeze action. So what I'll do for us is, those of you here in my room, I'll look for either a white arrow on the daily squeeze or an entry on an end of day 15-minute, 30-minute. Want to be a little bit careful about front running that momentum shift, but I do like it. All right, well, that got you folks here. Let's do a couple quick scans. Hey, thank you, Mark. I appreciate it. Yeah, we'll be back here, back to it, not next Monday, but the following Monday. All right, guys, I am very, very sad to report. The scan says no daily squeezes with a white arrow. Which I know is not true because I think silver might have one. Nope, silver fired. All right, we might be fresh out of A+ daily squeezes. My bad. I'm looking at the 15-minute time frame. Running the right time frame might actually help, huh? And not much GILD and NEM. And I believe GILD is healthcare, right? Healthcare bio. Healthcare is down here with a 27 and biotech a 57. Not quite your strongest pockets of the market. That'd be something more like Bitcoin and MicroStrategy, but I can't chase it all the way up here. But I'll be a buyer on a dipper. Let's go look at maybe a 1 hour and a 15-minute squeeze. Then I got to hit the road and get packing here, guys. Yeah, a little pressure in the QQQ, hourly, Exxon, Chevron, healthcare and energy on the hourly, which might work today. Big tech down, energy up, that kind of thing. But all right, guys, I'm going to let you go here, pack up, hit the road in a few. Again, folks in my room, not on the mic next week, but I'll be back the following week. And I am bringing the PC, so I'll be tuned in, I'll be tapped in. I'll keep on updating the spreadsheet. I'll send out trade alerts, ideas, and then probably crank out a few different videos, which I think are helpful for me. Where are we at? What looks good? What looks bad? All that good stuff. But all right, guys, thank you again. Happy Friday. I wish you all the best of luck here today. Like I mentioned, I will check out the Palo Alto dead body and see if we got anything to salvage. If not, we'll keep it and then move on to a different idea is the game plan for that one. I'm watching Google with you. I'm watching Palantir. And the most important thing I'm watching is a 4-hour QQQ and a 4-hour NQ squeeze. It's always a little bit better on a daily chart, but the same rules pretty much apply. When they build up and then fire a daily squeeze on the index, even if it's a 3, 4, 5-day window, you get a lot of wind at your back. If they're pumping the index, by default, a lot of things get to pump themselves. It is by far the best moment in time. Run your scans, build your watch list, check out the spreadsheet. Try to find those leaderships with good-looking squeezes. Yeah, brand new 4-hour QQQ. So this kind of implies another couple choppy days. Maybe a little flush down the 550, but we'll take it day by day, guys. Thank y'all again. Trade well, and yeah, I'll be in touch. Talk soon. Adios.